My mother-in-law sent my husband articles about divorce for 3 years. $216,000. That's what disappeared from my husband's own company over 3 years. A company his mother helped him build the books for. A company she called our family business. Right up until the day we found out she'd been quietly draining it, one fake invoice at a time. For 3 of those years, while she was moving money into an account we didn't know existed, she was also mailing my husband something else almost every single month, like clockwork, articles. Divorce articles. 7 signs your marriage is failing. Why first marriages rarely last. How to know when it's time to walk away. No note attached most of the time, just the article, folded in thirds, tucked into a card with her handwriting on the front. Thought you should see this. We used to laugh about it. My husband would toss them on the counter and say, "Mom's at it again." We thought she was just old-fashioned, a little intrusive, maybe grieving that her only son wasn't as close to her anymore now that he had a wife. We had no idea she was building a case file. We had no idea that every one of those envelopes was arriving on almost the exact same week as a withdrawal from an account with her name quietly attached to it. An account funded with money stolen from her own son's company, set aside for the day she was sure was coming, the day he'd finally take her advice and end our marriage, so she could step back in and make sure none of it, the business, the assets, the money she'd been skimming for years, ever had to be split with me. She thought she got away with it. She was wrong. This is the story of a mother-in-law who spent 3 years trying to talk her son into divorcing me while spending 3 years stealing from him to make sure that divorce would leave her, not me, standing on the winning side. And it's the story of how we found the paper trail behind every single one of those envelopes and how my husband, instead of the divorce she wanted, sent her something else entirely. An invitation. Hey everyone, welcome back. If you're new here, this is where I tell true stories about financial betrayal, the fraudsters, the scammers, the family members who exploit trust for money, and how the people they targeted fought back and got their justice. Today's story is about greed, betrayal, and getting every single dollar back. It's got a family-owned business, a secret bank account, forged vendor invoices, a small mountain of divorce pamphlets, and a mother-in-law who thought that if she just waited long enough, patiently sabotaged long enough, she'd never have to give up a cent of what she'd already decided belonged to family, meaning not me. If you've ever had someone quietly root against your marriage while smiling at your dinner table, or had a family member use helping out as cover for helping themselves, this story is for you. Stick with me to the end because I'll walk through the exact warning signs we missed, the kind that are so easy to explain away in the moment and so obvious in hindsight. Subscribe, hit the bell, and let's get into it. My name is Rachel. I'm 36, I work in healthcare administration, and my husband Daniel owns a mechanical contracting company, commercial HVAC installation and repair, that he built from nothing starting when he was 26 years old. Daniel's mother, Carol, is a retired bookkeeper, 32 years working for a regional trucking company before she retired, meticulous, sharp with numbers, the kind of woman who balanced her checkbook to the penny in an era when most people had stopped balancing checkbooks at all. When Daniel started his company, Carol was the obvious person to help him set up his books. She'd done payroll, accounts payable, accounts receivable, reconciliations, professionally, for decades. Daniel was a phenomenal technician and a decent salesman, but numbers were not his strength. Carol offering to handle the books wasn't just generous. From a business standpoint, it made complete sense. I need you to understand that at the beginning, I liked Carol. I want to be honest about that because this story only works if you understand that she wasn't a cartoon villain from day one. She was sharp, funny in a dry way, fiercely loyal to Daniel. She showed up to every one of his early job sites with coffee and sandwiches. When his first year in business was brutal, and it was, cash flows so tight some months he paid himself nothing, Carol was the one who kept the books balanced enough that he could see a path forward instead of panicking. Daniel and I met 4 years after he started the company, when it was already stable, already profitable, already running with Carol handling the books part-time from her home office, a role that had, by the time I entered the picture, quietly solidified into something much bigger than helping out. Carol had check-signing authority on the business account. She had her own login to the QuickBooks file. She managed vendor payments, payroll runs, tax filings, everything. Daniel trusted her completely, and honestly, why wouldn't he? She'd never given him a reason not to. The business was healthy. The books, whenever an accountant reviewed them for tax season, always came back clean. From the moment Daniel introduced me to Carol, something in the air was different than I expected. She was polite, she was, on the surface, welcoming, but there was a coolness underneath it, the kind you can't quite name in the moment but feel in your stomach anyway. She'd ask me questions that sounded like small talk but felt somehow like evaluation. So, what's your 5-year plan? Do you see yourself staying in this area long term? Daniel's worked so hard for what he has. I just want to make sure whoever's by his side understands that. I brushed it off as a protective mother being a protective mother. Lots of mothers are wary of their sons' partners at first. I told myself she'd warm up. She never did. The article started about 4 months after our wedding. The first one arrived in a card that said simply, "Saw this and thought of you two. Hope it's helpful." Inside was a printed article about the divorce rate among couples who marry before age 30, with a few sentences highlighted in yellow. Daniel laughed it off. "That's just Mom," he said. "She reads a lot, and she probably means well." But it wasn't a one-time thing. Over the following weeks, months, and then years, the articles kept coming. Not constantly, not obsessively enough to seem alarming in any single instance, but steadily, reliably, almost seasonally. An article about gray divorce trends, an article about how financial stress predicts marital breakdown, an article, chillingly specific in hindsight, titled "Protecting Your Business Assets Before Marriage Trouble Starts." That one came with no highlighting at all, just a single handwritten line at the bottom. Might be worth thinking about, for the business's sake. I want to be clear about something. Individually, none of these felt like a smoking gun. They felt like passive-aggressive mother-in-law behavior. Irritating, a little cruel, occasionally funny in a dark way once Daniel and I started keeping a running joke file of the worst ones. We had no idea, for nearly 3 years, that we should have been asking a very different question. Not, why is she sending these, but what is she doing while she's sending them? Looking back now, there were at least 6 moments that should have told us Carol wasn't just being an overbearing mother-in-law. She was executing something with far more intention. Red flag 1. Carol never once allowed a third-party bookkeeping review of her own work, despite Daniel's accountant suggesting it twice over the years as routine best practice for a growing business. Carol always had a reason. She was already stretched thin. A second set of eyes would just create confusion. Or, memorably, you don't need to pay someone to check the work of someone who's doing it for free out of love. Red flag 2. Around 2 years into our marriage, Carol pushed hard for Daniel to formally add her as a 10% equity partner in the business, framed entirely as protection. If anything ever happens to you, someone in the family needs actual ownership, not just access. Daniel, moved by the sentiment and trusting his mother completely, agreed. Neither of us, at the time, fully understood how that equity stake would later complicate exactly what she was trying to protect, namely her own claim on the business in the event our marriage ended. Red flag 3. Carol began insisting on handling all vendor relationships personally, cutting Daniel almost entirely out of communication with several key suppliers under the explanation that it was more efficient for one point of contact to manage invoicing. Red flag 4. A former employee, a project manager named Tomas, who left the company on good terms after 2 years, mentioned offhandedly at a barbecue that he'd always found it odd that certain supply invoices from a vendor called Bay West Mechanical Supply were higher than what he remembered pricing out himself. At the time, neither of us thought much of it. Tomas had moved to a different state for a new job, and it felt like ancient history. Red flag 5. Carol discouraged Daniel, gently but consistently, from ever looking too closely at the books himself. "You're the one who should be out there running jobs and making money, not stuck behind a desk," she'd say. "Let me worry about the numbers." It sounded like generosity. It was, in reality, a system designed to keep the one person with legal authority to notice anything wrong as far from the actual records as possible. Red flag 6, and in hindsight, the most damning. Every single divorce article envelope, once I finally went back and checked dates against bank records much later, arrived within roughly a week of a suspicious withdrawal from the business account. Not every withdrawal had a matching envelope, but every envelope had a matching withdrawal. At the time, none of this connected into a pattern. That's the nature of long-term financial abuse inside a family. Each piece is small and explainable on its own. It's only once you lay every piece on the same timeline that the picture becomes impossible to unsee. There isn't one single moment I can point to as the theft began, because unlike a one-time scam, this was slow, sustained embezzlement, a pattern built over 3 years rather than a single transaction. But there is one moment that, looking back, was the true beginning, the week Carol was granted that 10% equity stake in the business. Almost immediately after that paperwork was finalized, Carol opened a new business banking relationship at a different bank than the one Daniel's company had always used. A bank about 40 minutes from either of our homes, one neither of us had any personal or business reason to visit. She told Daniel it was for a separate payroll processing account to keep things cleaner for tax purposes, a plausible-sounding explanation that crucially meant Daniel's own name never needed to be added as a primary signer, since Carol handled all the setup. That account, we would eventually learn, received its first deposit 4 days later, $6,200, transferred from the main business operating account under a memo line that read, "Vendor Advance, Bay West Mechanical." There was no vendor advance. Bay West Mechanical Supply at the time was owed nothing. That $6,200 was the first of what would become, over the following 3 years, dozens of transfers, some disguised as vendor payments, some as equity distributions Carol quietly authorized to herself using her new ownership stake as justification, and some in the final year simply labeled CC admin fee, with no explanation at all, because by then Carol had grown confident enough in the system she'd built that she stopped bothering to disguise it well. The discovery didn't come from suspicion about money. It came from something much smaller, a scheduling conflict, of all things. Daniel's company was bidding on a large commercial contract, a multi-building HVAC retrofit for a regional hospital system, easily the biggest job the company had ever pursued. As part of the bid package, the hospital's procurement office required 3 years of financial statements, reviewed by an independent accountant, not just whatever internal numbers Harold had been producing. Daniel hired an outside CPA firm to prepare those reviewed statements, the first time in the company's history that a true third party had gone line by line through Carol's books. I remember exactly where I was when Daniel called me from his truck, his voice tight in a way I'd never heard before. "The accountant needs to talk to both of us, tonight. She says there's something in the vendor payments that doesn't add up." The CPA, a meticulous woman named Angela Ferris, sat us down at our kitchen table with a laptop and a legal pad covered in handwriting. She'd cross-referenced 3 years of payments to Bay West Mechanical Supply against Bay West's actual invoicing history, which she'd requested directly from Bay West's accounts receivable department as part of standard verification. The numbers didn't match, not by a little. Bay West's real invoices to Daniel's company over 3 years totaled $184,300. Daniel's company had paid out under Bay West's name $312,900. The difference, $128,600, had never gone to Bay West at all. Angela had also flagged something else, a pattern of equity distributions totaling $61,400 that Carol had authorized to herself over 18 months, distributions that under the actual operating agreement Daniel had signed when granting her the 10% stake required unanimous partner approval for any distribution exceeding $2,000, approval Daniel had never given and, as we later confirm, had never even been asked for. And finally, scattered across the final year, a series of transfers labeled simply CC admin fee, totaling $26,100, with no supporting documentation of any kind. Angela looked at us and said, as gently as a forensic accountant can say something like this, "I think you need a lawyer before you do anything else. This isn't a bookkeeping error. This is a pattern." Total unaccounted for founds, as Angela's initial estimate laid out that night at our kitchen table, $216,100. I want to walk through what that number actually meant for us, beyond the dollar figure itself, because the financial damage and the emotional damage arrived at the exact same moment and were impossible to separate. Financially, that missing $216,000 was money that should have funded equipment upgrades, a second service truck Daniel had been putting off buying for 2 years, and a genuine emergency reserve that we now understood hadn't actually existed the way Carol's reports always claimed it did. It meant the company's real financial position was significantly weaker than either of us believed, weaker at exactly the moment we were trying to bid on the largest contract of Daniel's career. Emotionally, it meant rereading 3 years of helpful divorce articles through an entirely new lens at our kitchen table, together, both of us going quiet as we started pulling dates. We got Daniel's old bank statements and my meticulously organized card collection, because I'm the kind of person who keeps cards, even the passive-aggressive ones, tucked into a drawer, and we laid them side by side against Angela's transaction log. Card, "Thought you should see this," postmarked March 14th, article about divorce statistics among couples with financial strain. Transaction log, a $4,800 Bay West payment discrepancy, dated March 9th. Card, no note, just the article, postmarked August 2nd. When is it time to cut your losses? Transaction log, an $8,200 equity distribution, dated July 29th. We went through 9 more matching pairs before we stopped counting, both of us sitting in stunned silence at our kitchen table, the same table where those cards had sat, unopened for a day or two at a time, treated as a minor annoyance for 3 straight years. Every article had been, in effect, a receipt. Daniel, still processing, still not fully able to accept what the evidence was showing him about his own mother, made the mistake, an understandable one, but a mistake nonetheless, of calling Carol directly before we'd consulted an attorney, hoping for an explanation that would make this all make sense. Carol's response followed almost exactly the same pattern of consciousness of guilt behavior we'd later learn is common in family embezzlement cases. She was defensive immediately, framing Daniel's questions as an attack on decades of unpaid help. She claimed the Bay West discrepancies were timing issues from old invoices she hadn't reconciled properly. She said the equity distributions were advances against future profit sharing that Daniel had verbally agreed to. Don't you remember? She said the admin fee transfers were reimbursement for years of unpaid bookkeeping labor she'd never formally billed for. None of these explanations held up against Angela's paper trail, and Carol, notably, could not produce a single supporting document for any of them when Daniel asked. Then, 4 days later, Carol called back with a different approach entirely. She offered to settle everything quietly, proposing to relinquish her 10% equity stake and pay back $30,000 as a gesture of good faith, on the explicit condition that Daniel drop the matter entirely and, her words, not let this outsider, meaning me, turn this into something that destroys our family. $30,000 against a documented shortfall of over $200,000. An unprompted settlement offer tied explicitly to avoiding formal legal process and tied explicitly to blaming me for a theft she alone had committed. We declined. Once it became clear Daniel wasn't accepting her settlement offer, Carol's behavior shifted again, and this is where the story stopped being about a bookkeeping dispute and became something much more calculated. Within a week, Carol's login access to the QuickBooks file showed a login at 11:47 p.m. on a weeknight, well outside her normal working hours, during which several historical transaction memos were edited. Angela caught this immediately, because QuickBooks maintains an audit trail logging every edit, including the original text before a change was made, something Carol either didn't know or had forgotten after years of unchallenged access. The original memo on that $6,200 first transfer 3 years earlier Vendor advance, Baywest, had been quietly edited to read, Baywest partial deposit, see contract addendum. No such addendum existed anywhere in the company's files. She was cleaning up the story after the fact, in real time, while we were sitting across the table from her lawyer, discussing a settlement she had no intention of honoring in good faith. This is the moment the entire case turned from concerning to prosecutable. While cross-referencing bank statements from the separate account Carol had opened 3 years earlier, the one she described as being for cleaner payroll processing, Angela discovered something Carol almost certainly forgot was even connected to that account: a linked low-balance brokerage account, opened the same week, funded entirely and exclusively by transfers matching the exact dollar amounts of the fraudulent Baywest payments, the equity distributions, and the admin fee withdrawals. Every dollar, traceable, dollar for dollar, transfer for transfer, straight from Daniel's company account, through the disguised payroll account, into a brokerage account that had, over 3 years, grown through modest but real investment gains to a balance of $241,000. Carol hadn't spent the money. She'd been saving it, building it, growing it. And attached to that brokerage account in the account opening documentation Angela subpoenaed once formal legal proceedings began was a designated purpose field, a simple drop-down menu most people never think twice about when opening an investment account. Carol had selected divorce/asset protection planning. She hadn't just been stealing money. She'd been building a war chest explicitly earmarked in the bank's own records for the divorce she'd been trying to manufacture for 3 years. Money she intended to have ready and positioned the moment Daniel finally took her advice so that she could step in as the 10% equity partner, buy out whatever remained of his share of the business at a depressed post-divorce valuation, and make sure that whatever split happened, I walked away with nothing. Once we saw that account designation, divorce/asset protection planning, this stopped being something we could resolve quietly within the family, even if we'd wanted to. Angela advised us, in no uncertain terms, that this needed to move to attorneys, and given the dollar amount, likely law enforcement. We hired a business litigation attorney named Priya Anand, who specializes in shareholder and partnership fraud, and who brought in a forensic accountant of her own, a former IRS financial investigator named Roger Delgado, to independently verify and expand on everything Angela had already found. Roger's first move was to formally, legally compel full transaction records from both the disguised payroll account and the linked brokerage account through a subpoena issued once Priya filed a civil complaint against Carol for breach of fiduciary duty as a minority equity partner, conversion, and unjust enrichment. What came back confirmed and expanded everything. Over 3 years, Roger traced 47 separate fraudulent transactions, ranging from $1,100 to $8,400 each, all disguised through the fake Baywest vendor account, unauthorized equity distributions, or unexplained admin fee withdrawals. The total, once Roger's more thorough audit was complete, came to $224,700 in principal stolen directly from the business, which, combined with $16,300 in documented investment gains inside the brokerage account, meant Carol was sitting on $241,000 that had never belonged to her. We built my own supporting timeline in parallel, the same way I'd learned to from watching Daniel go through this. A spreadsheet cross-referencing every one of Carol's divorce article cards against the exact dates of the fraudulent transactions Roger had identified. By the time I finished, the correlation wasn't just suggestive. Out of 47 fraudulent transactions, 41 fell within a 9-day window of a card arriving in our mailbox. That pattern, Priya told us later, became one of the most persuasive pieces of circumstantial evidence in the entire case, not because it was financial proof on its own, but because it established motive and intent in a way raw numbers alone couldn't.
Because the amount exceeded the felony threshold of embezzlement in our state by a wide margin, and because Carol's use of a separate, disguised bank account to launder company funds into a personal brokerage account raised questions about bank fraud and potential securities account misrepresentation, since she'd certified false information on the brokerage account's ownership and funding source disclosures. Priya recommended we file a report with our county's Economic Crimes Unit and simultaneously notify the state's Financial Crimes Enforcement Division. Detective Wallace, who was assigned the case, told us something similar to what we'd heard in other family fraud situations. Cases like this live or die on documentation, because juries and prosecutors alike are skeptical at first of family members claiming theft against other family members, until the paper trail makes any other explanation impossible. We had that paper trail. Roger's forensic report ran to 61 pages. My card and transaction correlation spreadsheet ran to 14. Detective Wallace's unit subpoenaed the bank directly, confirming the account opening documentation, the divorce/asset protection planning designation, and, critically, recorded phone calls from the bank's standard account opening verification line, in which Carol, on a recorded call 3 years earlier, described the funding source for the account as gifts from family members, a statement now directly contradicted by the traced transaction history showing the money's actual origin. Knowingly misrepresenting the source of funds to a financial institution is not just a civil matter. Depending on the specifics, it can implicate state or federal financial fraud statutes separate from the underlying embezzlement charge. There were 2 moments in this investigation where Carol nearly slipped out of the consequences that were coming for her. The first happened almost immediately after Priya filed the civil complaint. Carol, clearly anticipating that her accounts might eventually be frozen, attempted to move roughly $180,000 out of the brokerage account into a certificate of deposit at a third bank under a slightly different name variant, using her full legal name, Carol Ann Whitfield, rather than the Carol Whitfield name on the original account, a small inconsistency that, if it had gone unnoticed, might have let that CD slip through an initial asset freeze that was keyed to the original account name. Roger caught the discrepancy almost immediately during a routine follow-up records check, and Priya moved quickly to amend the temporary restraining order to explicitly cover any account associated with Carol's Social Security number, regardless of name variant, closing that gap literally days before the CD would have matured and become eligible for withdrawal without penalty. The second near miss was more personal, and in some ways more painful. Carol, once she understood the criminal investigation was moving forward, attempted to reach me directly, not Daniel, at my workplace, showing up unannounced in the parking lot of the hospital
administration building where I work, asking me, essentially, to convince Daniel to drop everything, framing it as protecting the family, and telling me that if I really loved him, I'd understand that this isn't worth destroying a mother and son over. I want to be honest, for about 10 minutes in that parking lot, I felt the old instinct to smooth things over, to be the peacemaker, the role Carol had clearly hoped I'd default to. I didn't take the bait. I told her, calmly, that this had never been my decision to make, that the money belonged to Daniel's company, and that if she wanted to talk about it, she needed to talk to her attorney, not to me in a parking lot. I reported that interaction to Priya immediately, because Carol was, by that point, a named defendant in active civil litigation with a temporary restraining order in place for direct contact attempt with me, arguably an effort to pressure a party connected to the case outside of proper legal channels, became one more data point supporting the pattern Priya was building for the court. Roger's final forensic pass through to brokerage accounts' full transaction history turned up something none of us were expecting to find, a recurring $340 monthly payment going back nearly 3 years to a solo practice family law attorney 2 counties over, an attorney with no prior connection to our family, no connection to Daniel's business, and no record of ever representing Daniel or me in anything. Priya, recognizing the significance immediately, issued a subpoena for that attorney's billing records related to Carol's account. What came back confirmed what the payment pattern had already strongly suggested. Carol had retained that family law attorney on an ongoing consultation retainer for nearly 3 years, specifically according to the attorney's own billing memos, for advisory services related to anticipated divorce proceedings of client's son and strategic positioning of business equity interests in the event of dissolution.
She hadn't just been saving money for a divorce she was trying to manufacture, she'd been paying a lawyer for 3 years, using stolen company funds to prepare the legal groundwork for exactly the outcome she wanted, a divorce that would let her position her 10% equity stake to absorb as much of the business as possible, cutting me out entirely the moment Daniel finally took the hint from 3 years of mailed articles. That attorney, notably horrified once the full picture of where his retainer payments had actually come from became clear through the subpoena process, cooperated fully and voluntarily with investigators. 8 months after that kitchen table conversation with Angela, the district attorney's office formally filed charges against Carol for felony embezzlement, felony fraud involving a business entity, and false statement to a financial institution related to the misrepresented funding source on the brokerage account.
Given the total amount, the district attorney's office ultimately calculated the loss, including investment gains realized on stolen principal, at $241,000. The embezzlement charge alone carried a potential sentencing exposure under our state statute of up to 15 years. Though, as our attorneys explained clearly, actual outcomes for defendants without prior criminal history typically land well below at maximum. Simultaneously, Priya's civil case sought not only full restitution, but also the forced dissolution of Carol's 10% equity stake in the business, arguing successfully that a partner who had committed sustained fraud against the very entity she held equity in forfeited any claim to that ownership interest under the terms of the operating agreement's fraud forfeiture clause, a clause Carol herself, ironically, had insisted be included when the equity agreement was originally drafted, framing it at the time as protection so nobody can ever say I took advantage of my own son. Carol's defense attorney initially pushed hard for a plea to a single misdemeanor with no restitution obligation beyond what had already been frozen in the accounts, arguing that this was fundamentally a family financial dispute that had been overblown by outside professionals. That argument collapsed almost immediately once the family law attorney's billing records and the divorce/asset protection planning account designation were formally entered as part of the prosecution's evidence packet. It is one thing to argue mismanagement or misunderstanding. It is a very different thing to explain, to a judge, a 3-year paper trail showing a documented plan, funded with stolen money, built explicitly around engineering a divorce for financial gain. 11 months after charges were filed, Carol pleaded guilty to felony embezzlement and false statement to a financial institution, in exchange for the prosecution not separately pursuing a bank fraud charge tied to the account misrepresentation. At sentencing, the judge ordered 3 years in state prison, 5 years of probation following release, and full restitution of $241,000, structured through immediate seizure of the frozen brokerage and CD funds, with any shortfall enforceable through wage garnishment of Carol's pension and Social Security benefits, a route Priya had specifically built into the restitution order, anticipating that most of the recoverable liquid assets would come from the frozen accounts themselves. Because Roger and Priya had moved quickly to freeze both the original brokerage account and the misnamed certificate of deposit before either could be liquidated or moved further, nearly the entire stolen amount was still recoverable at the time of sentencing. The court ordered immediate transfer of $238,400 from the frozen accounts directly to Daniel's business, satisfying the vast majority of the restitution order in a single disbursement. The remaining $2,600 was recovered within 4 months through a combination of a small remaining CD balance and an initial garnishment against Carol's pension, closing out full restitution well ahead of the multi-year timeline the court had originally structured for it. Separately, as part of the civil judgment, Carol's 10% equity stake in the business was formally and permanently dissolved under the operating agreement's fraud forfeiture clause, returning full, undivided ownership of the company to Daniel alone, the exact outcome Carol had spent 3 years and $250,000 stolen dollars trying to prevent from ever happening in reverse.
Because embezzlement and fraud convictions become part of the public court record, and because our small business community is a genuinely small world, word of Carol's conviction moved through the local trade and business networks she'd spent decades embedded in, the same trucking company circles she'd worked in for 32 years, several of whom reached out to Daniel directly, stunned once the story became public through routine court reporting. The family law attorney who had unknowingly taken retainer payments funded by stolen money issued Carol a formal notice terminating their professional relationship the same week charges were filed, a detail that, small as it may seem, meant Carol lost not just the money she'd stolen, but the very legal strategy she'd spent 3 years and tens of thousands of dollars quietly assembling. I mentioned at the very start of this story that the brokerage account was designated for divorce/asset protection planning. That was true, and it was damning, but it wasn't, we eventually learned, the whole picture. During the sentencing phase, once the court ordered a full accounting of every dollar and every associated document, Priya's team uncovered something none of us had anticipated. Alongside the retainer payments to the family law attorney, Carol had also spent, over the final 18 months, roughly $19,000 of the stolen funds on something else entirely, a down payment held in escrow on a small condominium in a retirement community 2 states away, near where her own sister lived, along with a series of consultations with a business broker specializing in valuing and selling minority equity stakes in small contracting companies. Carol, it turned out, hadn't simply been planning to force the divorce and absorb the business through her equity stake indefinitely. Her actual endgame, laid out in emails Roger recovered from the business broker's files, was to force the divorce, use her 10% stake and the accumulated stolen funds to negotiate a buyout of Daniel's remaining interest in the company entirely, essentially forcing her own son out of the business he'd built from nothing, sell the company outright to a regional competitor who'd expressed acquisition interest 2 years earlier, and retire, fully funded, to that condominium near her sister, with no further involvement in either the business or, implicitly, in a version of Daniel's life that still included me.
It wasn't just about keeping the money away from a daughter-in-law she didn't approve of. It was a fully engineered exit plan, using her own son's company as the vehicle and 3 years of stolen funds and manufactured divorce pressure as the fuel. Daniel's reaction to this discovery was somehow both harder and easier to sit with than the theft itself. Harder because it confirmed that this had never been about protecting him, it had been about using him. Easier in a strange way because it finally answered the question that had quietly haunted him through the entire process, whether some small part of what his mother had done had come from genuine, if misguided, love. The business broker emails made that question impossible to keep asking. This had been a plan, and he had been a means to an end in his own mother's plan, not its protected center. Daniel used the restored funds to finally buy that second service truck, hire 2 additional technicians, and, with Angela now serving as the company's permanent outside accountant, performing quarterly independent reviews with full transparency to both Daniel and me, the company successfully won that hospital retrofit contract 8 months later, the same bid that had originally triggered the outside financial review that unraveled everything. We restructured the company's financial controls completely. Dual signature requirements on any transfer over $1,000, a completely separate outside bookkeeper with no personal relationship to either of us, and quarterly reviewed financial statements sent directly to Daniel's personal email, bypassing any single point of internal control entirely. Daniel has had no contact with Carol since her sentencing. He has, at my encouragement, left the door open in the smallest possible way. A single letter sent through her attorney stating simply that if she ever wanted to have an honest conversation about what she'd done, without conditions and without asking him to blame me for any of it, he would consider it. He has not heard back. As for me, 3 years of divorce articles arriving in our mailbox used to make me feel quietly like an outsider being measured for a door that might one day be shown to me. Now, every one of those envelopes sits in a folder in Priya's case file, permanently reclassified as evidence in a case my husband's mother lost. If there's one thing I want you to take away from this story, it's that financial abuse inside families rarely announces itself as theft. It arrives disguised as help, as bookkeeping, as protection, as someone in the family should handle this so you don't have to worry. The people who exploit that trust count on the fact that questioning a parent's motives feels disloyal, even when the numbers are screaming at you to look closer. So here are the warning signs drawn directly from what we lived through that I want you to actually remember. 1. If a family member manages your business or personal finances and consistently resists any independent third-party review, even when it's standard, routine, or required by an outside party like a lender or a client, that resistance is itself information. Legitimate financial management welcomes a second set of eyes. It doesn't fear them. 2. Watch for anyone pushing you toward broader financial authority or ownership using the language of protection. Just in case something happens is sometimes exactly what it sounds like. It is also sometimes the exact phrase someone uses right before positioning themselves to benefit from a future they're actively trying to engineer. 3. Pay attention to patterns, not just individual incidents. One passive-aggressive comment, one odd article, one uncomfortable question about your future together, none of that is proof of anything. But if you ever notice a pattern repeating with suspicious regularity, it's worth asking what else might be happening on that same timeline. 4. Any account of any kind, opened using funds you have access to but don't personally control, deserves periodic verification, even if it's described as being for something as innocuous as payroll processing or record-keeping efficiency. A 5-minute statement review once or twice a year is not paranoia, it's basic financial hygiene. 5. An unprompted settlement offer, especially one that arrives bundled with a request to avoid lawyers, keep things quiet, or protect the family from outside scrutiny, is very often a signal that the person making the offer already knows exactly what a formal investigation would find. And 6. The one that ties this whole story together, if someone in your life seems invested in the failure of your marriage or your relationship in a way that goes beyond ordinary concern, repeatedly, persistently, almost strategically, it's worth asking, honestly, what they might stand to gain if that failure actually happened. Not every skeptical in-law has a hidden brokerage account, but motive is worth examining before you dismiss the pattern as personality. If you take one thing from today's story, let it be this. The people who count on your loyalty to stop you from asking hard questions are usually the people with the most to lose if you ask them anyway. Have you ever been financially betrayed by someone who was supposed to be protecting you? A family member, an in-law, someone you trusted completely? Tell me what happened in the comments. And if any part of this story helped you recognize a pattern in your own life, hit subscribe, because next week I'm telling you about a man who discovered his business partner of 9 years had been running a second identical company under his wife's maiden name, and the single shipping label that gave the whole thing away. Thank you for watching. Stay sharp out there, and I'll see you in the next one.